Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical support and demand area. In fact, from here, multiple rejections to the upside were created. At the moment, the market is testing the exact same level and rejecting it to the upside. We can also notice, if we zoom in into the most recent price action and structure, we can see how we still have 9 days and 9 hours to go before this monthly candle here will close. However, if it will remain at this current prices, essentially we will have also a break of monthly structure, because what we can see here is that at this level we have previous monthly resistance that is now going to be turned support if we get a monthly close above the level. And at that point, we could expect a retest and then more bullish continuation. And by a retest, I mean a retest of that new previous monthly resistance turned support. Now, dropping down on the weekly time frame, what do we have? Well, from a weekly standpoint, what we can notice is that we just had the creation of an inverted head and shoulders from a weekly standpoint. Now, if you cannot easily identify it, let me help you here by putting these essentially circles here. Now, these will be the left shoulder, head, and right shoulder, with the left shoulder being here, the head here, and the right shoulder here. Now, when you have the creation of an inverted head and shoulders, you actually have a fake breakout, essentially. That is what creates the pattern. You have a level of support. The market is respecting that support, right? Then the market breaks below it, breaks back above, and at that point, the previous support that has been broken to the downside and then broken back above, therefore we have a fake breakout, is now turned against support. The market tests it and rejects it to the upside, creating the right shoulder. And at that point, you have left shoulder, head, and right shoulder. So just for your information, the creation of a head and shoulder or inverted head and shoulder is simply the creation of a move to the upside or to the downside after a fake breakout. Now, here from a weekly perspective, as the market has created this inverted head and shoulders and now broken already to the upside, we could expect more bullish continuation. Now, if we look closely, we can also see that weekly structure has now been broken to the upside. In fact, we now have the previous low here. We also have a higher low. We had the high here, and now we have a higher high. So essentially, the market went from creating lower lows and lower highs to now creating higher highs and higher lows. So we had a shift from a weekly bearish market to now a weekly bullish market, and we could expect more bullish continuation away from this area. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about NZDUSD when the market was here, testing that right shoulder of the inverted head and shoulders, and I explained all the reasons for which from here we could expect this rejection to the upside, which is in fact exactly what the market has just given us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. Now, as the market is breaking above all resistance, we could expect more bullish continuation. But before we dig deeper into the technicals here from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, and essentially how they're moving their positioning. Now, if we check the net positions here, what we can notice is that in the long run, even though net positions are now getting decreased, going from minus 12.8K to minus 17K, anyway, in the long run, we have seen an increase of the net positions from minus 21.2k to now minus 17k. And there is a possibility, if the market will now go and test a strong support area, to see more institutional longing, further increasing the net positioning. Now, let's identify where we could have an increase of net positions and institutions once again adding longs. Now, from a daily standpoint, it will be very important to see how the current candle closes. If this daily candle closes above all this previous structure, at that point, all this previous resistance, which we can identify at this level, acting as previous resistance here, 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 and here, will be turned support at this level, because as we know in the market, previous resistance, once it gets broken to the upside, becomes support. So if we will have the break above the level and then a retest of this previous resistance turns support, we will actually have a retest of confluence of support, because after an impulse, if we get the correction and we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we would have the 0.32 50% and 0.618 Fibonacci retracements all lining up inside of this area, essentially creating confluence of support inside of this zone, inside of which we could see more institutional longing, so net positions continuing to increase, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So if the market will retest this zone after breaking it to the upside, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market, as we would have, to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.